Good afternoon, guys.
Good afternoon, sir.
Okay, let us start. So yesterday we saw valuation under customs, right? Valuations under customs. Today we'll start with your import procedure, export procedure, and warehousing. Okay, these three will be important from your theoretical point of view. Huh? I have doubts in ITC. Should I ask at the end? Yes, ITC will cover at the end, and also tomorrow's lecture is for ITC sums. Na? All right. So today we'll focus on what are my import procedures. Very important, guys, from theoretical question point of view. What are my export procedures? Okay. Then what is the concept of duty drawback? Duty drawback I'll include in the import procedure only. Yeah? Including duty drawback. Duty drawback. Okay. And then the concept of warehousing. Warehouse procedure. Okay, if we get time for today, then we'll cover warehouse procedure also today. Import procedure and export procedure will take a lot of time. These two procedures will take a lot of time for us. All right, because we are also looking at covering the chapter of duty drawback. When will we discuss homework? Oh, you guys did the homework question. Let us discuss that then first. Homework question. This was the homework question, na? Okay. So what they had given, I'll just drag it over here. Right, this was the homework question for valuation under customs. Okay, date of presentation, date of bill of entry is given 20th June. Rate is BCD 20%, interbank exchange rate is given, and CBIC rate is given. Date of arrival 30th June, BCD rate is given, CBIC rate is given. Then rate of integrated tax, IGST is given, CIF value is given, air freight is given, and insurance cost is also given. Social welfare surcharge is also given. Okay, so just like yesterday's sum, what we'll do, we'll start with CIF value. Right, we'll start with the CIF value. This was yesterday's homework question, and just check your answers. So the CIF value is what? $2,000, 2,000 USD. This is all in USD. From that, first I'll deduct the insurance, I'll deduct the freight. So insurance was how much? Insurance was $100, and freight was, air freight was $500. So I get the FOB, I get the free on board. Free on board will be this minus this minus this. Okay, we'll check the answers. We'll check the answers. So this is my free on board value. Okay, now I'll add insurance and add freight as per the rules. Right, I'll add back these as per the rules. Insurance value is given. Insurance is ascertainable. So I'll take the actual value. I don't need to take 1.125%. Now I'll take the actual value. Actual value was 100. I'll take as it is. And freight, for freight, I'll compare between actual freight or 20% of FOB, whichever is lower. Actual freight or 20% of FOB, whichever is lower, right? So actual freight was 500 or 20% of FOB. So FOB is 1400 into 20%, 280, whichever is lower. So 280 will be my freight. Okay. So when I add back, I'll get my assessable value. I'll get my assessable value in dollars, right? Assessable value in dollars. If you're getting this value, are you getting these answers in dollars? Okay. Now I have to convert these dollars. Into what? Into home currency. So convert into home currency using which rate? Using bill of entry rate and correct, and rate given by using bill of entry rate given by CBIC. So bill of entry is 20th June and CBIC rate is 70. So I'll use the rate $1 equal to 70 rupees. Right? And so my assessable value in home currency. Assessable value in home currency will be 1780 into 70. Have you got this assessable value, everyone? No problem. Okay, next.
Yes, sir.
Now what I'll do, I'll take BCD. Now the same problem with BCD, which rate? Rate of the later date. I'll take the rate of the later date. Later date is date of arrival of aircraft in India, 30th June. So 30th June rate is 10%. So BCD will be this amount into 10%. Okay, rate of the later date. So my BCD is 10% of assessable value. Okay, then SWS, social welfare surcharge, is 10% of BCD, right? 10% of BCD, 10% of this value. So now I get the total value, that is AV plus BCD plus SWS. Oops. So AV plus BCD plus SWS. So that will be the sum of all these three put together. And then I charge IGST at what rate? They have told us at 12%. IGST at 12% into 12%. So my final value, okay, my final value of goods, final value after payment of duty will be this amount plus this amount. Just check if you're getting these answers. Integrated tax we take at the end, no? Okay. And those are not logged in from your with your names, I'm removing them from the teams. Huh? I'm going to remove them from the teams. I don't want any unwanted people over here.
Excuse me, sir. Sir, for
Yes.
assessable value after adding basic custom duty, will the total be 1,37,060 rupees?
Let me check what happened. 1,37,000. How come the total of these, na? Assessable value plus BCD plus SWS.
Oh, okay.
BCD was 10% of assessable value, 10%, not 20%. I am taking the rate of the later date. Now I am taking the rate of the later date. All right. Done. So there I get the final value. Check your answers, guys, if you're getting this answer. All right.
Excuse me, sir. Surcharge will always be calculated on custom duty, BCD.
Yes, SWS will always be calculated on BCD, even if SWS is not given in the question. Huh? Even if this 10%, fifth point was not given in the question, still we will calculate the surcharge, because surcharge is by default applicable when there is BCD.
Okay, sir. Thank you.
Okay, done. So now valuation is done. Yes, go ahead.
The IGST 12% is calculated on sum of AV,
Correct.
BCD,
Correct.
WS.
Correct. Sum of all these three. I'll take the total of all these three. AV plus BCD plus SWS, this amount, and then 12% will be charged on this amount.
Okay.
Okay. Yes. All right. Now, so valuation, we have done valuation in two parts. Huh? First is valuation as per customs for imported goods, and the other one was valuation as per baggage. Okay. Baggage also we have done. Huh? Baggage also we have done. Baggage valuation also we have done. So now we'll start with import procedure. What is the procedure to import goods? This is not for baggage. Huh? This is not for baggage. Baggage you can just bring along with you from the flight or whatever. Okay, you can just carry along it with you. So this is the import procedure for a manufacturer or trader. Okay. Section wise import procedure is given. I am going to write the sections. If you guys want, you can write it in the exam, or if you don't remember the sections, don't quote any wrong section. Huh? If you don't remember the section, just leave it, just give it step by step. Okay. So step 1 is section 29. Step 1 is section 29, arrival of aircraft or vessel or your vehicle to India. Okay. It should be done only by person in charge, okay, and it should be done only on authorized custom stations. Okay, you cannot land your aircraft on an unauthorized custom station. Huh? You will be given a list of authorized custom stations, right? And you have to give the person in charge. Okay, you have, when you submit your bill of entry, you'll have to tell who is the person in charge with name. Okay, only that person in charge can land your aircraft, vessel or vehicle, bring your aircraft, vessel or vehicle to India at an authorized custom station with a person in charge. So for example, for an aircraft, person in charge will be the pilot. For vessel, person in charge will be the captain of the ship. Okay, and for vehicle, person in charge will be either the driver or the owner. Okay, no one apart from that can bring the vehicle, aircraft or vessel to the custom station. Simple. Section 29 is simple. Okay, now in case of bad weather, a little bit relaxation will be given. You can also land on non-authorized custom stations. Huh? In case of bad weather, you can also land on non-authorized custom station, but then you'll have to wait for custom authorities to come, okay, and escort you till the custom station. Okay, till the authorized custom station. So even if you land on a non-authorized custom station, in case of bad weather, you'll have to just wait there. Okay, then the custom authorities will come and escort you up to the point of authorized custom station. All right, no problem till here, guys. Right, next, section 30. Section 30 will be submit a report. Submit your import general manifesto. Import general manifesto. You can either submit this or you can submit the import report. Okay, so import general manifesto is called as the IGM. Okay, and import report is called as the IR. So step 2, once you land your aircraft, you have to submit import general manifesto. Okay, both these documents. So IGM is submitted by the goods which are coming through aircraft or vessel. For them, it will be IGM, and the goods which are coming through land, that is through vehicle, for them they will have to submit the IR. Okay, both these documents will contain what? Will contain the details of goods to be imported, right? Goods to be imported, that is goods which are on the vessel, right? Goods which are on the conveyance. Okay, along with its quantity and valuation. Okay, this is not bill of entry, huh? Guys, this is not bill of entry. This is the proof that what kind of goods you are carrying on your conveyance. See if this is clear. This is not bill of entry. Bill of entry will be submitted once you reach the custom ports, or bill of entry can be submitted previously also. That we'll see in the later section. So in section 30, we are submitting import general manifesto, IGM, or import report. Okay, these documents will contain the details of the goods to be imported. Okay, it will also contain details of crew members, right, or passengers coming along with the conveyance. All right, done. Understood section 30? Okay. Okay, and one more thing is that if you don't do this, if these reports are not submitted, okay, if these reports are not submitted and you directly enter the custom station, okay, then penalty of 50,000, penalty of 50,000 will be levied. 50,000 rupees per conveyance will be levied. Okay, you have to compulsorily give these documents. You have to compulsorily give these documents. If you say our aircraft, vessel or vehicle left in a hurry, that's why we could not, take this document, we could not prepare this document, then a penalty of 50,000 rupees will be levied and you will be stopped at the custom stations, asked to prepare a new import general manifesto now. Okay, otherwise then if you don't have these documents, your goods will not be clear. If you understood till here. Okay, so section 30A will, so this I'll put this line over here. The details of crew passenger members coming along with conveyance will be under section 30A. Okay, it will be given along with import general manifesto, right? But there's a separate section for that. It is under section 30 only, but section 30A, right? So this is your crew manifesto. This is your crew manifesto. Okay. So arrive at the authorized custom station and give the IGM and give the crew manifesto. Understood till here, guys? No problem. Now let us see what is section 31. Section 31 is wait to receive entry inwards document. This document will be given to you by the custom port authorities. So you'll have to wait to receive the entry inwards document from port authorities, right? So you cannot unload your goods, you cannot start unloading your goods, right? You'll have to wait to receive this entry inwards. Okay, this will be given, it will be given only if IGM or IR was submitted. It will be given only if IGM or IR was submitted, correct? And the customs officer is sure that you are not bringing any prohibited goods to India. Okay, there is a list of prohibited goods. There is a list of prohibited goods. So customs officer will make sure you are not bringing any prohibited goods into India. Okay, the third condition is that customs officer, the officer makes sure, right, that there is availability to unload goods, especially on ports, right? On your seaports. Okay, when you are coming through vessels, there sometimes is no available berth, right? So we will call it as berth, available berth to unload the goods, correct? So unless the berth is available, you will not be given entry inwards. You will not be given entry inwards, right? So still you have not unloaded the goods, guys. You have not unloaded the goods. Okay, you cannot unload the goods unless you have received entry inwards. Okay, cannot unload goods, cannot unload the goods until entry inwards is received. Entry inwards is received. See if it is clear till here. Yes or no? Okay. Next is now once your entry invoice is received, what you'll do? Obviously, next part will be unload the goods, right? Unloading the goods. Okay, you will start unloading the goods. Okay, but there is a condition over here. You can unload only those goods which are mentioned in IGM or IR. For example, you had prepared IGM, you had prepared the IGM while leaving the other country. So let us say my goods are coming from Sri Lanka to India. My goods are coming from Sri Lanka to India, right? And I had prepared the IGM while leaving Sri Lanka, correct? But at last moment, I added some goods onto the ship. Okay, I added some goods onto the ship, and these goods are not updated in the IGM. So now while unloading the goods, you can only unload those goods which are mentioned in IGM or IR, correct? The goods not mentioned, not on IGM or IR, they cannot be at any circumstance, they cannot be unloaded. Otherwise, it will be considered smuggling. Berth means the place. Berth means what? The place where I am unloading the goods. Na? Berth means the place where I am unloading the goods. So availability of, I'll say space. Na? In simple language, I'll say, officer, make sure that there is availability of space to unload the goods. Because in case of ships, what happens is that there is a lot of ships coming in for imports and going out for exports, and there is not enough space. There is no availability of docks, right? So in that case, you will have to wait till you get your entry inwards. You'll have to wait till your number comes. Okay, you cannot say that we will start unloading the goods and then we'll prepare all the other procedures. You cannot say that. Okay, because unless entry inwards is granted, you cannot unload the goods, and you cannot unload goods which are not on the IGM. If you try and bring in some goods which are not on IGM and still you try to bring in, it will be considered as smuggling. It will be considered as smuggling, and huge penalties will be charged. Okay, so let us say you are bringing a batch of let us say 1 lakh goods. 1 lakh goods are mentioned in IGM. Okay, and you try to unload 1,50,000 goods. Okay, this is not allowed. This will not be allowed. Okay, these remaining 50 goods that you are unloading and which are not mentioned on IGM, you will be held liable for smuggling this 50 unit of goods. Okay, so you have to be very careful, right? So that's why this unloading will happen under the supervision of a customs officer. Okay, so that is section 34. There is one more section 33 in between. Okay, so this unloading of goods will happen only under supervision of customs officer. If customs officer is has not yet come, you have to wait. So you have received the entry inwards. And the custom officer or the custom supervisor has not yet come. Okay, you cannot start unloading. Unloading of the goods will happen only under the supervision of customs officer, right? And then there is section 33, which is also logical. Unloading goods will happen only at specified, only at the specified, or I can say approved places. So you have been allotted a dock, you have been allotted a space, right? That, let us say, on dock number 59, you can unload your goods. Okay, so for, let us say, for Alpha company, for one specific company called Alpha Limited is allowed to unload the goods only on dock number 59, right? So then you cannot unload it anywhere else. You cannot unload it anywhere else. You have to unload it at specified or approved places, and you have to unload it under the supervision of custom officer, and you have to unload only those goods which are mentioned under IGM. So these three sections are important for unloading of goods, very important. If any of these sections, if provisions of any of these sections are not followed, then you will be liable under smuggling. Okay, government will treat as you have smuggled the goods into India. Understood till unloading, guys? What has happened till unloading? Understood all sections? So section 30 was bringing the goods. Section 30 was bringing the goods, right? Sorry, section 29 was bringing the goods. Section 30 and 30A is submitting the manifesto. 30 is submitting manifesto for goods. 30A is submitting the manifesto for crew members. Okay. And 31 is for your entry inwards. This will be given to you by the port authorities. All right. And then section 33 and 34. Section 33 and 32, 33 and 34 will be about unloading the goods. Will be about unloading the goods. Done till here? Any doubt? Guys, any doubt? Now, step number 8, section 45. Okay, section 45. Now, what I have to do, I have unloaded the goods, right? So it will go for scrutiny. It will go for scrutiny. Scrutiny means what? Whether goods unloaded are correct. Okay, the quantity is correct. Okay, and how much duty should be levied on these goods? How much duty should be levied on these goods, right? So once you unload the goods, now the port authorities, the port trust authorities will start doing their duty, right? They will start doing the scrutiny. The scrutiny will be done by customs officers of port trust authority. Port trust authority. Okay, very important, because in this scrutiny we will get to know how much duty we need to pay. Like here, over here, right? You are saying the CIF is 2000, right? But the actual assessable value is only 1780, right? So scrutiny is, in short, for your benefit also, na? For your benefit also scrutiny is happening. Okay, so you had submitted that our CIF value is 2000, but as per Indian customs rule, your CIF value only comes out to 1780. So you are paying duty on a lesser amount than you are supposed to pay. So the scrutiny is good from your point of view also. Okay, all right. So section 45 will be all for scrutiny, right? So unloaded goods. Now these unloaded goods, the unloaded goods will be in the custody of port trust authority. Yeah? It will be under the custody of port trust authority. We'll call them as PTA. Okay. So now the duty of the PTA is PTA should keep track and record of all the goods. Track and record of all the goods, right? The goods should not be lost. If the goods is lost, if goods are lost, PTA will pay compensation. PTA will pay compensation. Obviously, na? Because now I have unloaded the goods and I have given the goods for scrutiny to PTA. I have given the goods to the customs officer. So the goods are in the possession. Custody means possession of the PTA, right? So PTA has to keep track and record of all the goods. If the goods are lost, PTA will pay compensation to the company. Correct? Now, PTA will not allow to remove these goods. Correct? Remove the goods unless duty is paid. Unless duty is paid on these goods, they will remain in the custody of PTA unless and until the duty is paid on these goods by the company. Okay, and then in case of, now there is this new term. Do you know this term, pilferage? Have you heard about this term, pilferage?
Yes, sir.
The damage.
Damage, right? In case of pilferage, right, what will happen? PTA will pay duty. Company will not pay the duty. PTA will pay duty. Company will not pay the duty. Huh? Company will not pay the duty. PTA will have to pay the duty on the goods because the damage has happened in custody of PTA. So until scrutiny is happening, the goods are treated as if the property of the PTA. Okay. And in this scrutiny, what we are going to assess? We are going to assess whether the quantity of the goods is correct, the valuation of the goods is correct, and how much duty should be levied, how much duty should be charged on these goods. Understood section 45 scrutiny? All right. Next. Now finally I'll give my submit. Once scrutiny is done, I'll submit bill of entry. I'll submit the bill of entry. Bill of entry can be submitted before coming to India also, no problem. Bill of entry can be submitted prior also, or you can submit in step 9 also. Submit bill of entry. This will be electronically, yeah? E-bill. This will be e-bill of entry. Submit e-bill of entry, electronic bill of entry. Okay. So that the goods are given a stamp of cleared for home consumption. After scrutiny, what will happen? You will have to pay the duty, and once you pay the duty, you will get a stamp on your bill of entry that the goods are cleared for home consumption. Cleared means after payment of duty, cleared for home consumption. Is this clear, guys? Bill of entry. Okay. So now, guys, pay attention. Huh? This bill of entry can be submitted in step 9, right? In step 9 under section 46. Okay. Or we can also submit bill of entry can be submitted prior, that is prior to coming to India, before coming to India, submitted before coming to India, no problem. Okay, but you cannot submit it 30 days before. Maximum 30 days before you can submit. So if you are submitted the bill of entry prior coming to India, okay, your vessel, aircraft or a vehicle should reach within 30 days of submitting bill of entry. So let us say I submitted the bill of entry on 1st July. I submitted the bill of entry on 1st July. My vehicle, aircraft or vessel should arrive in India on or before 31st July. If my vehicle, aircraft or vessel arrives after 31st July, I'll have to submit new bill of entry. See if the time limit is understood. If you are submitting it before, it should not go before 30 days. Maximum 30 days before you can submit it. And here, if you are submitting bill of entry right now, the time limit is end of the day preceding the day of arrival. Preceding the day of arrival. Okay. So let us say if you are going to arrive on 1st July, you will have to submit the bill of entry latest by 30th June. Anyways, this is electronic submission, right? So you can submit it online. So if bill of entry due dates are understood, guys, time limits are understood. There are two ways to submit e-bill of entry. Yeah? There are two ways to submit the e-bill of entry. You can submit it on the spot, right? But on the spot also means what? End of the day, preceding day of arrival. Okay, 1 day before you'll have to submit. You have to submit 1 day before. Okay, or you can submit it before coming to India, but maximum 30 days before. Not before that. Not before that. Is this clear, everyone? Yes or no?
Yes,
Okay. Okay. Next. Now in bill of entry only. Yeah. Bill of entry is 3 types. There are 3 types of bill of entry. 3 types of bill of entry: Form 1, Form 2, okay, and Form 3. So Form 1 is when you remove the goods and take it to your factory. Take it to your factory. Okay. Second is you remove the goods and transfer them into a warehouse. Warehouse is government warehouse. Huh? Warehouse means government authorized warehouse. Okay. Warehouse doesn't mean your company's warehouse. Warehouse is a government authorized storage place. Okay. And third is, okay, you can ex bond. You can clear the goods for home consumption. Clear the goods for home consumption. I'll explain this ex bond when we come to duty drawback. Okay, I'll explain this ex bond when I come to the concept of duty drawback. So if you are removing the goods means paying the duty and taking the goods. Removing the goods means paying the duty and taking the goods. Okay, so you are paying the duty and taking the goods directly to your factory. You will submit bill of entry in Form 1. Okay, but then you say, I don't want the goods right now. I want the goods after 10 days. So till 10 days, you will keep them in a government authorized warehouse near the custom ports. Okay, these warehouses are near the custom ports. Okay, these warehouses are near the port. Okay, and these are government authorized. So you remove the goods and transfer them into a warehouse. And Form 3 is ex bond, clear goods for home consumption. That third part I'll explain it later. Understood? Section 46, bill of entry. Submit bill of entry. Okay, so here when you submit bill of entry, okay, the company will also pay the duties while submitting the bill of entry. Okay, so company will also pay the duties while submitting the bill of entry. So if it is clear till here, or sometimes just a sec, or sometimes the payment of duty can also be done after scrutiny. After bill of entry is done, scrutiny is made. After that also you can pay the duty. So any which way, payment of duty should be done in this step. Yes, go ahead.
Sir, but the duty will be calculated later on, right?
That's what I said. The payment of duty, that's what I said, that after scrutiny, you will be allowed to pay duty even after scrutiny, even before scrutiny, no problem. So payment of duty can be before scrutiny. That is, I am paying on my behalf, right? Or after scrutiny. But obviously, even if you pay before scrutiny, they will still check whether your duty has been paid properly or not. Okay, so in this step, payment of duty has to be done. Understood? And now finally, after all payment has been done, what I'll have to do, I'll get the certificate from the government. Okay, the certificate for clearance for home consumption certificate, right? Certificate I will receive. Clearance for home consumption certificate I'll receive. Once you pay all the duties, then only you'll receive this certificate, huh? Clearance for home consumption. Then only you will receive this certificate. So this certificate will be received only if, number one, all duties are paid. All duties are paid, including IGST, huh? Are paid, including IGST. Including IGST. All duties are paid. Number two, the officer is satisfied. Officer is satisfied that all procedures have been done. All procedures have been followed. Okay. All procedures have been followed. And number three is officer should also be sure. Officer should also check whether goods do not fall under prohibited list. Under prohibited list. I'll tell you what is a prohibited list. The Indian government does not allow import of certain things. Okay, does not allow import of certain things. So if your goods fall under prohibited list, even if you're paid all duties, even if you have satisfied all procedures, you will still not get clearance for home consumption. Huh? You'll still not get clearance for home consumption. Is this clear now? So this will be the penultimate step, that you should receive this certificate. If this certificate is not received, your goods are not cleared. Your goods are stuck with the customs authority. Okay. And now last step is section 48. Removal of goods. This is also important. Huh? Removal of goods. You have to remove. The company has to remove the goods within 30 days of receiving the certificate. Okay. If you have not removed them within 30 days, what will happen? If not removed within 30 days, the custom authority will auction and sell off your goods. Huh? Auction and sell off your goods. Okay. If you don't remove the goods within 30 days of clearance certificate, okay, you said I'll remove it later on. Okay, I don't have time right now. Government will say we don't have space to keep your goods, right? We don't have space to keep your goods. If you don't want to remove now, remove and keep it in our warehouse. Keep it in our government authorized warehouse. But you will have to remove it from the custom station. So if you're not removed the goods within 30 days, custom authority will directly auction and sell off your goods. Huh? Okay. Intimation will be given. Intimation will be given after 15 days. One warning will be given that 15 days are over. You have still not removed your goods. After 15 days, we'll auction off your goods. And intimation will be given. And then if you're still not removing the goods, then directly the goods will be auctioned. Charges for government warehouse, yes, I'll tell that. Now removal of goods, there are 4 ways in which I can remove the goods. Okay, there are 4 ways in which I can remove the goods, right? So we'll see that. Okay, so goods can be removed in 4 ways. Goods can be removed in 4 ways. Okay, number 1, take it to your company, right? Take it to your company. Done. You have paid all duties. You have got the clearance certificate. Just take the goods and go away. Okay, go back to your company. Simple, right? No problem. Second is what you can do is you can remove the goods directly to a warehouse. You can remove the goods directly to a warehouse, that is transfer the goods from the port from the port to government authorized warehouse. But obviously you will have to pay rent of warehouse. Huh? You'll have to pay rent of the warehouse. So if you understood this, remove the goods directly to a warehouse. Okay. Number 3. Now guys pay attention. Huh? Number 3. Don't pay duty. Guys pay attention now. Don't pay duty and still remove the goods directly to the warehouse under a bond. Under a bond. What the bond will say? The bond will say that goods are removed without payment of duty. Right? So at time of removal from warehouse, what will have to do? Company will have to pay the duty. Company will have to pay duty at that time. That is also okay. Pay duty at that time. See if this third way is understood to you guys. I can remove the goods directly to a warehouse, right? I can remove the goods and directly send to a warehouse. Warehouse means it is near the port. Okay, it is near the port and it is a government authorized storage system. Okay, so government will charge rent for that. So remove the goods directly to the government warehouse. Or third way is don't pay the duty. Okay, while removing the goods, don't pay the duty. Sign a bond. If you sign a bond, you will still get clearance for home consumption certificate. Huh? If you sign a bond, you will still get clearance for home consumption certificate. Correct? So don't pay duty and still remove the goods directly to the warehouse under a bond. Bond says that goods can be removed without payment of duty. But when you remove the goods from warehouse, that time company will have to pay the duty. See if third point is clear. Removal of goods. Okay. And the fourth way of removal of goods is transit or transshipment. Okay. Transit means what? You just came to India. So you are sending goods from let us say Europe to Australia. You are sending goods from France to Australia, right? And India was just a transit. So in case of transit, you don't need to pay duty. Huh? No need to pay duty. You are just stopping for a layover, right? So just like if I'm flying from India to USA and I have a stop in, let us say, Frankfurt, Germany. So I don't need to take Germany visa for that. No, I don't need to take the visa for that. So same way, if you are having a transit, right? Your goods were supposed to go from Europe to Australia and India was just a layover, then you can just go through without paying the duty. Okay, you can come at the port. Okay, you can dock your ships for a couple of days, take rest. Okay, and without payment of duty. But you cannot unload the goods. Huh? In case of transit, you cannot unload the goods. Okay, so no need to pay duty. So transit is without unloading and without payment of duty. Without unloading and without payment of duty. You can directly remove the goods. Understood the concept of transit?
Sir,
Huh.
during transit, the manifesto and all is not required.
Not required because the manifesto will be given to the Australian the manifesto will be given to the Australian government. So instead of giving IGM, you can just give transit manifesto.
And then these ships or vessels will not be inspected also.
They will not be. So then they will have to dock them in a specific transit docks. There are different docks. One is your transit dock, one is a transshipment dock, and another is your normal dock. So the above procedure will happen only on normal docks, not on transit dock and transshipment dock. Okay. And transshipment means what? Transshipment means you are unloading some goods in India, and then ship is going further. Ship is going further with remaining goods. Okay. So in that case, when you are unloading some goods in India, you will have to pay duty. Yeah? In case of transshipment, you are unloading the goods in India and ship is going further, then you will have to pay the duty. Transshipment also means you are unloading the goods in India, but transferring it on other ship. Then that time duty is not needed to be paid. Understand two examples of transshipment. Understand two examples of transshipment. Example one, number one is goods are coming from Europe. The ship is coming from Europe. Okay. Some goods are unloaded in India and remaining goods go further. Here payment of duty is compulsory. Why? Because what is happening? I am unloading the goods in India. And remaining goods are just going further. Second example of transshipment is ship is coming from Europe. Okay. All goods are unloaded in India from one ship. Okay. And transferred to another ship leaving from India. Is payment of duty compulsory?
No,
In this
sir.
case, no, payment of duty is not necessary. Because I am not bringing them into India. I am not going to bring them into India. So payment of duty is not necessary in the second case. In case of transit, never pay duty. In case of transshipment, there are two examples of transshipment. One is some of the goods we are unloading in India and bringing into India, and remaining goods are going further. In that case, the goods which are unloaded and brought into India, payment of duty is compulsory. And second example is my ship is coming from Europe to India. Goods are unloaded in India from one ship and transferred to another ship leaving from India to Australia. So goods are not brought into India. They are just transferred from one ship to another ship on Indian port. So payment of duty is not required. Okay, done. Understood removal of goods?
So what kind of questions will be asked on this? Do we have to describe the
Theoretical question. So any kind of theoretical question will be covered. So they might ask you what is the need of import general manifesto? When is it needed to be submitted? Right? Or what is entry inwards? What is bill of entry? Or they might ask you what is the difference between bill of entry and entry inwards? So any kind of theoretical question, I have explained the entire import procedure from start to finish. Okay. Or they can ask you the difference between what is the difference between transit and transshipment. When do we need to pay duty? Or they can also ask, can a company remove the goods from the custom port without paying duty? Yes, in the third case. You can remove the goods from custom port without paying the duty, but you will have to enter into a bond with the warehouse. Okay.
So, sir, we can keep the goods in the warehouse for as long as we want.
As long as you want, you can keep as long as you want. There is no 30-day limit. 30-day limit is only at the port. 30-day limit is only at the custom ports, right? Because custom port is not a storage place. Right? So removal of goods, this only from custom ports, not from warehouse. In warehouse, that's the requirement of warehouse, na? The warehouse will be near the custom port and it is government authorized. So you can keep in warehouse as long as you want, no problem, right? But from custom port, you'll have to remove it and transfer to a warehouse. Okay, but you will have to pay warehouse rent. You'll have to pay warehouse rent. Can you zoom out? Okay, sorry. I'll just take it over here now. Unloading the goods and okay. Can you explain transit once again? Transit means what? Just like like our airlines, na? When I say I have a transit visa. Transit visa means what? I am going from India to USA, right? And there is a transit in Frankfurt, correct? So same way, my ship is going from Europe to Australia, and my ship is going to wait at Indian port for 2 days, so that the ship also can cool down and my crew members can also relax. So that is a concept of transit. So in transit, you are not unloading any goods, so you don't need to pay any kind of duty. Okay, next. Done, guys. Clear till here? No problem. All right. Next. So this is the entire import procedure. So now removal, after removal, we don't have to do anything with the custom authority. After removal of goods, we don't have to do anything with the customs authority.
So do we have to remember the sections?
Section, if you don't remember the section, that's okay. If you don't remember the section, that's okay, no problem. Okay, don't quote a wrong section. You can just, instead of section, you can just write step 1, step 2, step 3, step 4, that way. Okay. For BCom level, I don't think remembering section is that important. Okay. If you do remember and write, obviously you will get that additional half mark, 1 mark. Okay. Done. Any doubt in the entire import procedure, guys? Any doubt in the entire import procedure? I'll not be giving theoretical notes for import procedure because the notes are almost of 3 pages. Import procedure, the note is of almost 3 pages. I have simplified it over here, and whatever you need to understand and know, I have written only that. The actual import procedure is 3 pages long, so you don't need to. From your syllabus point of view, whatever is important, I have covered all those things, and I have simplified it with your timings, right? Time limits, and even with the penalties. If you don't follow any of this, you will have to pay a penalty of 50,000. Okay, and I have also covered all the required documents: IGM, import report, crew manifesto, entry inwards, correct? Then bill of entry form 123, clearance for home consumption certificate, and bond. So all kind of documents needed for import procedure also I have covered in this. All right. So go through it today once more after the lecture or something, or later on, you just go through the import procedure once more. If you go through it 1 or 2 times now, you will by default learn it. Okay, you'll by default learn it. All right, next. So now, once the import is done, all of this is done. All of this is done. Section 48 till this is done. Now, there can be one more thing in import, that is section 74 and 75. This is only applicable if the company wants duty drawback. Only if the company wants duty drawback, then only this will be added in the import procedure. Okay, section 74 and 75 will be added in the import procedure. This will be added only if the company wants duty drawback. Okay, now what is a duty drawback? Let us understand that. This is also there in your syllabus. Duty drawback is also there in your syllabus. It is covered under a separate chapter. Okay, but I am writing it over here only because it is a part of import procedure. So when you write the import procedure, you don't need to write section 74 and 75. Okay. When you write the import procedure, you don't need to write section 74 and 75. Okay. Duty drawback. Duty drawback means what? Import duty paid. Import duty paid is refunded by the government. Do you think government will do that? Import duty paid is refunded by the government. When will the government do it?
If the goods are damaged.
No, if the goods are damaged, there is no need for payment of duty only, na? And if you remove the goods, from the custom port, and after that goods are damaged, government does not care. Government will not give you refund. So when will government give refund on import duty?
If it's charged too much.
If it is charged too much, no. That happens at the time of scrutiny. At the time of scrutiny, once the government decides the duty, you will have to fight there only. Before payment of the duty only, you will have to fight with the government. Okay. Right, to promote export. Perfect. Import duty paid is refunded by the government only if imported goods are re-exported. Only if the imported goods are re-exported, then government will say you have done a good job. You are contributing to the exports. So the import duty which you had paid, we will refund you the import duty. Why? Because you are contributing to the exports of the country. Only that time duty drawback will be given. So if you understood the concept of duty drawback. Okay, import duty paid.
During the BOE, when the duty has already been paid, that time if the person pays more duty, then he has to.
No. That time, see, government will do a scrutiny, and if you are paid bill of entry before coming into India, while submitting the bill of entry, you have paid more duty. At the time of scrutiny only, you will get the refund. So scrutiny is where your final duty is going to be considered. Okay, your final duty will be at the time of scrutiny. If you have paid more duty, you will get the refund. Okay, and if you have paid less duty, you will have to pay additional duty. This section 74 and 75 is what? After removal of goods. Okay, company is claiming refund of import duty. Okay, so government will allow only if the imported goods are re-exported. Okay, example I'll give. Let us say in 2021, in March 2021, okay, Alpha PLC, Alpha Limited, imported goods worth 10 lakhs into India, and paid BCD of 10%, SWS of 10% on BCD, okay, and IGST of 12%. Okay, this was done in March 2021, correct? And in, let us say, March 2022, okay, so during the year what happened? During the year, company manufactured these goods, and in March 2022, company exported these goods, these manufactured goods to any country. Doesn't matter. It does not matter that it should go to the same country. It can go to any country. What government will do? Government will refund a specific percentage of import duty, not 100%. Okay, So BCD plus SWS plus IGST. So government will refund a specific percentage. What is that specific percent? We'll see. Understood? Is this example of duty drawback? You have to export the goods, huh? You have to export the goods in this case. All right. So now let us understand why two sections. Huh?
So what if the company has imported the goods like raw materials and they want to process it and export the finished goods to some other country?
That
So
doesn't matter. You are exporting. As long as you are exporting, government does not care whether the export is again to the same country. Doesn't matter.
Okay, sir.
Okay.
So refund is given after export, right?
Yes, after the goods have left India. Okay. After the goods leave Indian territorial waters, at that time you will get the refund. Okay. Yes. So now why two sections? There are two sections over here. Section 74 is different and section 75 is different. Okay. So section 74 is for traders. So what the traders are doing, they are importing the goods on one hand and exporting the goods on the other hand. So I am importing goods from, let us say, China and exporting goods to USA. I am not doing any processing. Okay. I am not doing any processing. And section 75 is to manufacturers. So what they are doing, they process the imports. Okay. Make finished goods. Right. And then they export the finished goods. So these are two different sections. These are two different sections. The duty drawback rules in both these sections are different. Okay. So that's why two sections are made. Section 74 for traders and section 75 for manufacturers. The provisions of section 74 will be different. The provisions for section 75 will be different. Okay. So I'll just color combine them in different colors. So understand till now what is the duty drawback concept. Import procedure has finished over here. Import procedure has finished after section 48. Okay. Import procedure finishes over here. Import procedure finished. All right. Now this is only applicable if the company wants duty drawback. This will be additional and only applicable if the company wants duty drawback. And what is duty drawback? The import duty paid above. The import duty paid above is refunded by the government only if the imported goods are re-exported. Let us look at both the sections now, guys. Section 74 and 75. Is it getting too much for you guys? I hope not. Okay. So section 74 is that what is happening? Company has imported the goods and same goods are exported. Same goods are exported. There is no process happening. Okay. No process happening. Simple. Then in this case, what is happening? The company will get 98% refund. Refund means what? Duty drawback of the import duty paid. Company will get 98% refund. Company will get 98% refund. Why? Just because it is contributing to the export of the country. Company will get 98% refund, that is duty drawback of the import duty paid, right? However, okay, now see, government is saying company will get up to 98%. Okay, that 98% will depend upon timing. Okay, however, the re-export should happen within maximum 2 years. Within maximum 2 years. Okay. The re-export should happen within maximum 2 years. If you re-export after 2 years of importing, if you re-export after 2 years of importing, okay, then no duty drawback. Then no duty drawback. See if it is clear till here, guys. Company will get up to 98% refund, not exact 98%. I'll tell you how this refund is going to happen. Okay. Is this understood till here? And the condition is that the re-export should happen within maximum 2 years. If you re-export after 2 years, even though if you're re-exporting, you will still not get any refund. You will not get any duty drawback. Okay. Here, why I have written up to 98%? Because the rates will differ. Rates will differ if you use and re-export the goods. If you use and re-export the goods, okay, then you will not get entire 98% refund. Your refund will start to reduce. Your refund rate will start to reduce because you're using it now. So you are doing a second-hand re-export. Second-hand goods are re-exported. Then your duty refund will be lower and lower. So if you understood section 74. Yes or no?
So, but if you use the goods and then re-export it, the value addition would happen and then the government should be happy, right?
Use means use for personal purpose, not for processing.
Okay. Okay.
Use means for personal purpose. So let us say, so I imported like 5 mobiles. Okay, I imported 5 mobiles. Okay, all these 5 mobiles were used by my company for 1 month, and now I'm exporting them. Okay, so then that time what will happen? That time I will not get the entire 98% refund. My refund will start to reduce. My refund percentage will start to reduce. Okay, so there is no process happening. No process happening. No process happening in case of section 74. Okay, now here the goods can be re-exported even as baggage. Okay, so you can just take, so for example, I had purchased a mobile, I had imported a mobile, right? I'm not a trader, right? I'm not a trader. I have imported the mobile and I paid import duty. Okay, and now I used it for, let us say, 1 month. Okay, and then in case of exporting, I'm not a trader, right? So I'm not going through the entire export procedure. I'm just taking it as a baggage with me, and I'm saying that I'm going to sell this mobile in the other country, right? So even you can do that also in this case. Even then you will still get refund of import duty, but then you will have to submit a proof to the government that you have sold it to someone in other country. Okay, that certificate will have to be given. Then only you will get the refund. So these goods can be re-imported even as baggage. They can be re-exported even as baggage. Okay, but a certificate here, certificate of sale has to be given. Okay, then only you will get the duty drawback.
Sir, how will the government know that the goods have been used?
So what happens if the goods are unpacked, right? So for example, I am a trader. What I have done, I have purchased the goods, right? I have purchased the goods and I have unpacked the goods, and again I am going to resell. So government cannot track that, right? So government will say that we will not consider the use, we will see the timings. Let me just open a chart for you guys. The government will say that we don't care how much goods you have used. We will just see what are the timings on which you have used it. Okay. So let me open up a chart. See if you can see this part here. I'm marking it in blue. Can you see it?
Yes, sir.
Okay. So if you have used for not more than 3 months, right? If you have used for not more than 3 months, correct, then you will get 95% duty drawback. If you have used between 3 months, more than 3 months, but not more than 6 months, then 85% of the duty drawback. Okay. If you have used for more than 6 months, but not more than 9 months, then 75, 70, 65, 60%. And if you have used more than 18 months, right, then no duty drawback. Okay, then you'll get no duty drawback. So for saying, for purpose of saying, they say 2 years, but actually it is only 18 months. Okay, but in theoretical, you will write two years, huh? That goods have to be re-exported within 2 years. In theory, you will write it has to be re-exported within 2 years. But in reality, this is how the duty drawback percentage will be calculated. Okay, I think these rates are not expected from you guys. Okay, but still you guys can remember this rate, and I can give this to you guys as a chart. Duty drawback, rate of duty drawback in case of re-export. Okay, so the usage cannot be traced by the government, but government can trace the number of months after which you are going to re-export. And once that period expires, your duty drawback rate will start to reduce. Your refund rate will start to reduce. This is nothing but refund of duties. This is the percentage of refund of import duty. All right, done. Understood, guys? Okay. So this is section 74 in case of traders. Now, in case of manufacturer, what is happening? Processes are being conducted on the goods, and nature of goods has changed. Nature of goods has changed. Okay, and the goods have become finished goods, right? So they have been converted into finished goods. Okay, so the nature of the goods has completely changed. Nature of the goods has completely changed. So now company will get refund as specified by that particular industry. Specified by that particular industry. So if you are processing, let us say, electronic item, refund rate will be different. If you are processing normal furniture items, the refund rate will be different. Okay, if you are processing any food packages or something, the refund rate will be different. All right, so that will depend upon the particular industry. Okay, that will be specified by the government. So you don't need to learn those rates. Okay, but you will not get these amount of refund. Up to 98% will not be allowed. Somewhere from 80% to 90% will be allowed. That will be dependent upon the government. Okay, company will get refund as specified by that particular industry in which you are manufacturing your product. Nature of the product can change. Nature of the product can change. So industry can change, the rate can change, right? There is no limit here. There is no limit of re-exporting. You can re-export it anytime. You can re-export anytime. Even if you re-export after 10 years, that's okay. You'll still get the refund. You can re-export any time, no problem. There is no limit of re-exporting. You can re-export anytime. You will still get the duty drawback. So this is clear, guys. Now, the goods cannot be exported as baggage. Cannot be exported as baggage. Okay. Company will have to go through the entire export procedure that we are going to learn next. Company will have to go through the entire export procedure. It cannot re-export just as a part of baggage. It will have to go through the entire export procedure. We'll see what is the export procedure. Is this clear? And there is one more additional rule. One more additional rule is that in case of section 75, additional rule is that value of export should be more than value of import. Value of import. Then only you will get duty drawback. So for example, you have imported goods worth 10 lakhs, processed them, manufactured them, made finished goods, and finished goods you are only exporting worth 9 lakhs. You will get zero refund. The value of export should be more than the value of import. If value of import is 10 lakh and value of export is only 9 lakh, means you are using some of the goods for your own purpose. So government will say in that case, absolutely no refund. No refund on 9 lakh, or no refund on 9 lakh also. Absolutely no refund. Your value of export should be more than value of import. Then only duty drawback will be done. So this is additional rule for section 75. Section 75. Okay. Here there was no such additional rule. No such additional rule for section 74. Because if you use it, the value of the exported goods will be obviously lower. If you are importing a mobile, using it for, let us say, 12 months and exporting it, the value of export will be lower than value of import. That's okay. You will still get your duty drawback. See if all these point of distinguish are understood, point of differences are understood, guys. Yes or no?
Sir,
Hmm.
in section 74, if suppose goods worth 100 rupees are imported,
Okay.
so is it necessary like while exporting it should be 100?
No, it can be lower than 100 also, no? Because that's what I said. If I am importing goods worth rupees 100, okay, then I'm using it for 12 months. I can use it and still re-export, na? I can use it and still re-export. If I used it and I am re-exporting as second-hand goods, that's okay. The value of export will be lower than value of import. Still, you will get duty drawback in case of section 74. But here, when you are doing section 75 as a manufacturer, your value of export should always be more than value of import. Then only you will get refund. Otherwise, zero refund. Otherwise, absolutely zero refund. Then you are just using that section for your own purpose. Government will not give any refund then. Okay, done, guys. Understood all these procedures. So this is a part of import procedure, but this is only for duty drawback. So when in the exam import procedure is asked, you can write till here only. Yeah? Till section 48 is enough. Till section 48, it's enough to write import procedure till section 48, right? Duty drawback will be asked separately. Understood everything that I have taught today, guys? Is there any question? So I'll write it as import procedure. So entire import procedure we have covered in one Excel sheet. Go through this entire import procedure today. Huh? Go through this entire import procedure today. Okay. So tomorrow we are still going to do our GST and ITC questions, and still we have one day left. Day after tomorrow. That time I'll complete of the export procedure and warehouse procedure. Or should I tell you export procedure? Export procedure is very easy. It will be completed within 5 minutes.
No, sir, tomorrow, day after.
Okay. Export procedure is only like 4 steps. 4 steps of export procedure and not so much in detail. Import procedure will always be in this much detail because government is strict about imports. Okay. Government wants people to export, right? So export procedure has been made simplified, has been actually simplified by the government. We'll do it in 5 minutes, guys. It will hardly take 5 minutes. Hardly take 5 minutes. Kar dete hai na? We'll complete it. Okay. Okay. Good. Export procedure is very easy. Very easy. Government wants to encourage export, right? Government wants to encourage exports. Okay. So procedure is simple. Procedure is simple. Okay. So step 1. Step 1 is section 50. Section 50. You have to prepare a shipping bill because you are going to load on the ship, right? You have to make a shipping bill, or you have to make a bill of export. Bill of export, right? So this shipping bill is in case you are exporting through aircraft or vessel. Okay. And bill of export is in case you are exporting through vehicle. Done. Step 1 is this much only. There is no time limit. Okay. There is no time limit. You can do it anytime before exporting. You can do it anytime before exporting. There is no time limit. Okay. But the only thing is that this has to be done electronically. Yeah. This has to be done electronically. Just like bill of entry, right? Done. Step 1 is done. Step 2 is section 51. Here also there will be clearance of goods. Here also there will be clearance of goods. Okay. The officer will see that goods are not under prohibited list. Just like imports, we have a prohibited list for exports also. So officer will see that goods are not under prohibited list. And then, now guys, pay attention. Huh? Officer will pass let export order. Let export order. That's it. Clearance of goods is done. Okay, clearance of goods is done. So like in import, before clearance of goods, we had to do so many things, right? Here, I have to just submit the shipping bill, that is bill of export, and I will get the clearance if officer is sure that these are not prohibited goods, and officer gives me a let export order. My clearance of goods is done. Once that is done, I'll start what? I'll start loading the goods. I'll start loading the goods because I'm exporting, right? I have to load the goods on the conveyance, on the aircraft, vessel, or vehicle, right? On the aircraft, vessel, or vehicle. Okay. So that is covered under section 39. So that will be section 39. I have to do it. Only on. Okay. So this will be done only after, just like entry inward, here I'll receive entry outward certificate. I can start loading only after entry outward certificate has been received. For import, there was entry inward certificate, right? Here there will be entry outward certificate. Okay. And then after that, I can do the loading. Then section 40 is simple. Loading also has to be done. Under supervision of custom authority, custom officer. Because what will happen? You will try to export prohibited goods also. You will try to export prohibited goods also. So loading also has to be done under supervision of custom officer, right? Then section 41, fourth part. Section 41 is easy again. Section 41 is your ship, aircraft vessel, aircraft or vehicle leaves the country. So at that time, you will have to submit export manifesto. Just like there, when I submitted import manifesto, here I also have to submit export manifesto. Okay, that what are my goods entered on the ship, who are my passengers, and who are my crew members on the ship. Okay, and then section 5, sorry, fifth point, section 42 is leaving, right? This was leaving the port, leaves the port. This was leaves the port. Okay, and this will be leaving, or I can say crossing. What? When will be the goods exported? After crossing what?
24 nautical miles.
Correct. After crossing Indian territorial waters. That is 24 nautical miles. Correct. Good. Nautical miles. So that time my export procedure will get finished, right? This can be done only if we have return orders from the customs officer. Okay, done. Export procedure is done. Simple, na? So export procedure done. So the document, see, the documents are exactly opposite. Import manifesto was given in step 1. Here export manifesto will be given on the penultimate step, right? And just like there we had the different bills, here also we have shipping bill and bill of export. Clearance of goods will be there here also. And just like entry inward, here we'll have the entry outward. Done. Export procedure is done. Simple, na? Export procedure is not as complicated, but still it has few things that we need to remember. Okay, there is no time limit. There is no penalty. Okay, government wants to simplify the procedure, so government is doing this quickly. Government is also doing this quickly. Okay, just government wants to see that prohibited goods are not exported. So for example, prohibited goods are what? Some I can say birds and animals which are almost getting extinct in India, or let us say defense maps of India. Government does not want these things to get exported, right? Government does not want these things to get exported. So that's why what government is doing? Government is going to just focus on prohibited goods in export, giving the clearance certificate, entry outward certificate, and written order during crossing the Indian territorial waters. That's it. So export procedure is easier. You just hope that you guys get export procedure in the exam, not the import procedure. Okay, simple. Like I said, 5 minutes, exactly 5 minutes you need for export procedure. Okay, I'll save this. I'll still save this. Okay.
So this
Any doubt?
import and export procedure can come for how many marks?
Import procedure can come up to 10 marks. Okay, import procedure in detail can come up to 10 marks. Export procedure will be up to 5 to 6 marks, 5 to 7 marks.